You've got an idea, but no money. And your first thought is, I will get a grant, a loan, an investor. But what if that is a trap? In this video we explore when looking for capital makes sense and when it's just a fancy way to delay starting. Let's go! Every week I hear this line: I have a project, I just need $100,000. Just 100,000. As if money rains from the sky. And often the project doesn't even exist yet. Maybe there is an idea, even a brilliant one, but no customers, no test, no validated more. We have grown up with this myth that to start a business you need money right away. What you need first is clarity and a plan. Because the real risk of having too much money too soon is end up thinking you have a business when you have just someone else's bank transfer. But recall, capital is an accelerator, not a fixer. And often money doesn't solve problems. Maybe it amplifies them. Got a weak business model, you raise funds and fail bigger. Unvalidated product, you get finance and blow it up on Instagram, trade shows and ADS, and no one buys. The capital is fuel, but without engine, you don't go far, you catch fire. That's why starting without money forces you to focus on what matters. So, validate if there is a real demand. Talk to customers. Build something that works before you scale it. Let me be clear. Capital isn't useless. It just needs the right timing. Here are 3 solutions where funding makes sense. First, you have a real technical need. Think equipment, machinery, research and development expenses, physical prototypes, things you can't shrink, especially if your TRL is already mid-high, from 6 or above. Second, you have validated your offer. You have pre-sold, built a minimum viable product, or at least spoken to 50 real customers and know what they want. Now capital helps you scale, not to find a direction. And last one, you have already invested something on your own. Time, money, skills, sweat. If you don't have skin in the game, why should anyone else? But pay attention, even if one or more of these conditions are true, it doesn't guarantee you will find an investor. Because they might tell you to revise your go-to-market or to need fewer property, plant, and equipment or less research and development. Or that your traction is still too early. If none of those apply, wait. Start lean, start smart, and try this. First, bootstrap. Simplify your model, cut cost, start small and reinvest. Many great businesses started this way. Again, press selling, validate before you build. That's because if someone's willing to pay in advance, you have hit something real. Partnership. Not everything has to be yours. Find allies with channels, clients or infrastructures. Offer value and collaborate. And again, microcredit or smart grants. Some grants are useful, but and this is again the point, always with a ground plan. Funding should serve your business, not define it. What is really the difference between starting with funding and going solo? Starting speed. With funding is high. You can scale or start with readily available resources. And bootstrapping is gradual growth, step by step. Control over the project. And funding is reduced. There are constraints, expectation, or external partners. And bootstrapping is complete. Decide everything without being accountable to anyone. External pressure in funding is high. You have to perform, give back, or satisfy lenders. And bootstrapping is lesser. You have room to make mistakes and correct. Scalability in funding is high. You can invest in teams, marketing, technology right away. Of course, in the bootstrapping is limited. Growth follow cash flow. Validation request. In funding is request and in bootstrapping is mandatory. You don't sell if you don't survive. Financial risk. In funding is high because that's dilution, oversized projects. In bootstrapping is lower. You risk what you have and learn how to optimize everything. Real learning. In funding, you risk learning in theory, delegating too much. But, of course, in bootstrapping, you learn everything in the field with your own hands in the business. The external image. In funding is more initial credibility, if well communicated, of course. In bootstrapping, less visibility, but more substance in the long run. Sustainability. Funding is at risk. If external capital runs out, the castle collapses. And of course, in bootstrapping, very stronger, built on real revenue. Often building your business around a grant creates monsters. Bloat projects for scoring points. Cost added just to meet requirements. Ideas made for the form, but not for the market. Thus, if your business only exists because of a grant, it might not be a business, it's an artificial construct. And here is the hard truth, the disproportion between applicants and available resources. Applying for a grant doesn't mean winning it. The selection is harsh and sometimes is irrational. I've seen excellent projects rejected for no clear reason. So yes, grants can help, but they should never be your only plan. Your business must stand even without them. If not, you are not doing business, you are playing the lottery. Before you chase for $100,000, ask yourselves, do I have actual or interested customers? Do I know how I will use every dollar in the first 3 months? Do I have a clear plan to repay or monetize the capital? What happens if I get everything now and it goes wrong? If you can answer this, maybe you don't need funding. Maybe you need a strategy. So, at the end of the day, building a business is like mountain biking. When electric mountain bike came out, lots of people reached peaks that they would never climb before. The problem? On the way down, they didn't have the technique. They didn't know how to control the bike, and they got hurt. Funding is like that electric motor. It gives you a boost, but if you haven't learned how to pedal, steer and brake, you crash at the first obstacle. If this video gave you something to think about, subscribe to the channel. And if you want to know if your project is really ready for funding, contact is in the description. See you in the next video.